Nurina Ziha. So I will be explaining about two types of source document, which are the invoice and credit note, based on my personal transaction. So last year, I purchased a book titled Welcome to Hyunam-dong Bookshop from the TikTok shop, this one. An invoice is a source of document issued by the seller to the buyer as a request for payment. It contains important details such as the description of goods, quantity, price, and the total amount to be paid. So in my case, when I purchased this book from the TikTok shop, the seller issued an invoice that showed me the price of the book, the quantity, and the total amount, including any charges. This invoice serves as proof of the transaction and is used to record the sales accounting. So I put on the invoice clip over here that I got from the TikTok shop seller. Okay, next I will explain about the credit note. A credit note is a document issued by the seller to reduce or cancel the amount previously recorded in the invoice previously. So it is usually issued when there is a return of goods, overcharging, or cancellation of an order. So in my situation, I accidentally entered the wrong delivery address when placing the order. So as a result, I had to cancel the purchase and request a refund from the seller. After cancellation, the seller issued a credit note to reverse the transaction. This means the amount stated in the original invoice was cancelled and the payment was refunded back to me. So the credit note acts as a proof that the transaction has been adjusted and ensure that the accounting records are accurate. I have put on the clip of my credit note that I received from the seller after the transaction have been made. That's all from me. Thank you.
I want to show how delivery order and receipts work in business using real example. First, let's look at delivery order. I have one from Estil Sabah SDN BHD. It shows 6 units of Kaline roofing were delivered to SS Gold Trading with signature from the driver and storekeeper. This means the goods were prepared and delivered in business. It helps record sales and inventory, and in accounting, it is used as proof before making an invoice. Next, this is receipt. I bought 2 items, paid in cash and received a receipt as a proof of payment. The receipt shows the date, time, cashier, and total paid, so we know the payment was made. In accounting, it is recorded as cash sales to help track revenue and can also use for tax purpose.
So today I will explain about cash bill. That we know the definition of cash bill is a document issued by seller as proof as a transaction where payment is made immediately in cash for some goods or other service. Why the importance of cash bill? Because it serves as official evidence of a cash transaction. The document is the receipt by Jimat Sempurna. Based on the Jimat receipt provided, the receipt shows that the customer purchased several items, including beverage and fruits, with a total amount of 57 ringgit. The customer paid Rm50 ringgit in cash and received 12 ringgit as a change. The transaction is recorded together with the date, time, terminal number, and cashier ID as proof that the transaction has taken place. Now I will explain about sale orders. The definition of sales order is document issued by a seller to confirm that a customer order has been received and accepted. It includes such as item order, quantity, price, delivery information, and payment terms. Based on this document, the document shows that customer placed order for a specific product with a total amount of 42 ringgit. The order includes details such as order number, item description, quantity, unit price, shipping address, and payment method. The payment method is credit card.
Hi guys, today I will explain about debit notes and check. First, a debit note is a document used to inform that the amount payable needs to be increased. This usually happens when there is a pricing error, additional charge, or items not included in the original invoice. In my case, I received a debit note because there were extra charge or mistake in the previous invoice, so the supplier requests additional payment. Next, a check is a written method of payment from a bank account. The issuer instructs the bank to pay a certain amount to the receipt. A check is usually received when a customer or company uses it to make payment. They will fill in the name, amount, and sign in before giving it to us to deposit into the bank. That's all. Thank you.
Good morning. Today I will explain about payment vouchers and memos. A payment voucher is a document used by a business to authorize and record payments made to suppliers or for business expenses. It is important because it acts as proof of payment, ensures that all payments are properly approved, and helps maintain accurate accounting records for audit and tax purposes. Based on the example given, the activity involved is the payment made by Borneo Pacific Trading SDN BHD to ABC Supplies SDN BHD for office supplies and printer maintenance service using a check. The process includes preparing the payment voucher, recording the payment details such as pay, amount, and purpose, getting approval, and issuing the check. From an accounting perspective, this record cash outflow and reduce accounts payable. Next, a memo is an internal document used to communicate information or record accounting adjustment within a business. It is important because it helps ensure the non-cash transactions are properly recorded and that financial record remain accurate. Based on the example, the memo is used to record depreciation for assets such as company, vehicles, and computer equipment. It is sent by the finance manager to the accounting department. This activity involves preparing the memo, stating the detail of the adjustment, and instructing the accountant to record it. From an accounting perspective, this is a non-cash transition where depreciation expense is debited and accumulated depreciation is credited. In conclusion, payment vouchers are used to cash payment activities, while memos are used for internal and non-cash adjustment.